Welcome. Welcome to our deep dive into the cryptocurrency market as of July 2025. In this video, we'll explore the latest developments, analyze key market indicators, and discuss what this means for investors. So buckle up because the crypto world is more exciting than ever. Let's start with the big news. The U.S. House of Representatives recently held Crypto Week, focusing on legislation that could shape the future of digital assets. One of the key outcomes was the passage of the Genius Act, signed by President Trump, which provides a framework for stablecoin issuance. This is huge for Ethereum, as many stablecoins operate on its blockchain. According to the U.S. House Financial Services Committee, this act is expected to boost the crypto market significantly. How so? Announces Crypto Week. Looking at the numbers, Bitcoin has surged 28% this year, hitting a record high of over $123,000 earlier in July. As of now, it's trading at around $107,583. Reuters confirms these figures, highlighting the bullish trend in the market. Bitcoin climbs to record 23,000. Ethereum isn't far behind, with a 53% rally in July alone, currently priced at $3,764.84, as reported by Investopedia Crypto's upward run. To visualize this, let's look at a chart showing the price trends of Bitcoin and Ethereum from January to July 2025. As you can see, both assets have shown significant growth, with Bitcoin reaching new all-time highs and Ethereum following closely. But it's not just about prices. Institutional interest is at an all-time high, with spot Bitcoin ETFs recording inflows of over $14.4 billion this year, according to data from Farsight Investors' Crypto Week recap. The U.S. government has also established a strategic Bitcoin reserve, marking a significant step toward mainstream acceptance. Companies like MicroStrategy are increasing their Bitcoin holdings, signaling strong confidence in the asset. Wall Street firms, including Goldman Sachs and BNY Mellon, are embracing tokenization, bridging traditional finance with blockchain technology. On the regulatory front, besides the Genius Act, there are other bills like the Clarity Act and the Anti-CBDC Surveillance State Act being discussed. These aim to provide clearer guidelines for crypto operations, reducing uncertainty for investors and businesses. The U.S. is setting a precedent that could influence global crypto regulations, with similar discussions happening in the UK and EU. Let's shift gears and look at how broader economic factors are influencing crypto. First, inflation. The latest consumer price index data shows a softer-than-expected increase, with headline CPI rising only 0.1% month-on-month, below the forecasted 0.2%, as reported by XT.com. Can July inflation data. This cooling inflation is good news for risk assets like crypto, as it suggests the Federal Reserve might not need to tighten monetary policy as aggressively. In fact, there's talk of potential rate cuts later in 2025, which would further support crypto prices. Another key indicator is GDP growth. The U.S. economy contracted by 0.5% in the first quarter of 2025, worse than the expected 0.2%, according to BN Crypto top 4 U.S. economic indicators. While this might sound negative, it could lead to more accommodative monetary policies, which are generally positive for crypto. Initial jobless claims are also stable, coming in at 236,000, slightly below the expected 240,000. This stability in the labor market adds to the overall positive sentiment. Global liquidity is another factor to watch. It's reached $176.2 trillion, up $5 trillion year to date. This increase in liquidity often supports risk-on assets like Bitcoin, as there's more money flowing into the financial system, as noted by Equity Capital Crypto Outlook Q3 2025. Politically, President Trump's pro-crypto stance has been a significant driver. His policies, including the establishment of the Strategic Bitcoin Reserve and the signing of the Genius Act, have created a favorable environment for digital assets. Bitcoin even hit an all-time high of $108,786 on the day of his inauguration earlier this year, as reported by Nasdaq Crypto Price Update Q1 2025. Now let's dive deeper into the crypto market itself. Bitcoin's dominance is currently at 64.6%, meaning it still holds the largest share of the total crypto market cap, which stands at about $2.34 trillion for Bitcoin alone. However, if this dominance drops below 60%, it could signal the start of an alt season, where other cryptocurrencies start to outperform Bitcoin, according to Equity Capital Crypto Outlook Q3 2025. Speaking of altcoins, their performance is mixed. Ethereum is leading with a strong rally, while others like Solana are down 21% year-to-date, XRP is up 6.6%, and Tron is up 11.7%. The altcoin market cap is currently at $1.1 trillion, with potential for growth if it breaks above $1.3 trillion. DeFi platforms are seeing increased activity, with total value locked rising due to higher adoption of decentralized exchanges and liquidity pools. Ethereum and Solana are at the forefront of this trend, offering attractive staking rewards, as highlighted by Kraken's 7 leading crypto trends. Tokenization is another hot topic, revolutionizing industries by enabling fractional ownership of assets like real estate and art, making them more accessible and liquid. From a market cycle perspective, indicators like the Pi cycle and Puell multiple suggest that we're in a bullish phase with potential for further growth. However, investors should be cautious of overvaluation risks as the market approaches historical cycle peaks, according to CoinMarketCap crypto market cycle indicators. So, what does all this mean for investors? Well, there are clear beneficiaries from the current trends. Companies like Coinbase and Circle Internet Group are thriving due to the stablecoin framework provided by the Genius Act. Tech giants like NVIDIA and AMD are also benefiting from the overlap between AI and crypto infrastructure, as discussed in Business Insider Crypto is Jumping. On the other hand, there are risks to watch out for. Crypto mining companies like Riot Blockchain and Mara Holdings might face regulatory scrutiny over environmental concerns, and PayPal could encounter challenges with its stablecoin due to shifting regulations. For those looking to invest, consider allocating a small percentage, say 1% to 5%, to regulated crypto exposure, such as the iShares Bitcoin Trust ETF. Stocks like Coinbase or MicroStrategy can also serve as high beta proxies for crypto adoption, but remember, they come with higher volatility. In conclusion, the crypto market in July 2025 is thriving, driven by regulatory support, favorable macro conditions, and institutional adoption. With Bitcoin and Ethereum at record highs and new laws paving the way for mainstream integration, the future looks bright for digital assets. However, as with any investment, it's crucial to stay informed and manage risks carefully. Thank you for watching, and stay tuned for more insights into the world of cryptocurrency.